Hey investor friends, I'm Michelle Markey, and Berkshire Hathaway released their 2021 annual report on February 26, 2022, and with that includes its annual letter to shareholders from its chairman and one of the greatest of all time investors, Warren Buffett. And I find it such a joy to read his annual letter because I get so much amazing lessons and wisdom out of it, and I believe that it certainly helped me as an investor to grow and try to keep improving, and I think it's helped a lot of people. So I encourage everyone to visit BerkshireHathaway.com to read the annual report and letter so that you can also add to your investing knowledge. And what I'll recap today are my key takeaways from what the letter said, which includes Buffett's investing philosophy and surprising facts about Berkshire, as well as his 4 giants that constitute the majority of what Berkshire is all about, as well as their equity investments and also their huge cash position in U.S. Treasury bills, as well as their share buyback or repurchase program, and also a wonderful story about a wonderful founder of one of Berkshire's subsidiaries, as well as his thanks to shareholders that he echoes throughout the letter, and also Berkshire's annual meeting that's happening again in person at the end of April 2022. So that's super exciting, and I definitely plan to be there. So let me know in the comments if you're also going to be at the annual meeting. And also, if you enjoy learning about one of the best investors of all time, Warren Buffett, be sure to like and subscribe to my video and YouTube channel because I greatly appreciate it and it goes a very long way with the YouTube algorithm. So let's get into this letter. Warren Buffett starts off the 9-page letter in saying that he and Charlie Munger are honored by shareholders' trust in them in the job that they have of managing a portion of shareholders' savings. And they said that they report what they would like to know if they were the absentee owner and you as the shareholder were the manager of Berkshire Hathaway. So Buffett takes this job very seriously as much as he has a lot of fun at it. And he said that they treat all shareholders equally, and that includes analysts and large institutions, so they don't have discussions with them in particular, as well as how normally there would be new and interesting things that Buffett would like to cover in the annual report, but he said that there was little of that in 2021. And he also said that they made reasonable progress in increasing the intrinsic value of Berkshire shares. So even though he said that there wasn't all that much that went on, they still made progress in improving the overall value of Berkshire Hathaway. And in case it's not obvious, Buffett explains what Berkshire Hathaway shareholders own in that Berkshire owns a variety of businesses, some in whole and some in part, as well as a large amount of marketable common stocks, which include U.S. equities as well as non-U.S. equities. And he also describes how their focus is to have meaningful investments in businesses which have a durable economic advantage and a first-class CEO. And he emphasizes that he and Charlie are not stock pickers but are business pickers because they want to focus on having businesses that will have long-term performance, and they're not just trying to make investments based on timely market moves. And he also says that he makes a lot of mistakes. So I find that really forthright and full of integrity that Buffett keeps reminding shareholders that he's constantly making mistakes because he's only human too. And he said that in owning common stocks, it's a lot easier to exit mistakes in that than if you have to buy a whole company and then it's harder to sell that off, as well as the shooting fish in a barrel experience is much easier with common stocks than if you have negotiated transactions like when you acquire a whole company. So all in all, Buffett seems to be pretty content with how their investing philosophy has played out over time. And I don't want to forget to mention another thing that Buffett said, in that Berkshire has a collection of enterprises, some with extraordinary economics, some with good economics, and some which are marginal. And he said that one advantage of common stocks is that occasionally you get to buy pieces of wonderful businesses at wonderful prices, which include Apple. So I'm kind of wondering if Buffett is also trying to foreshadow how he's looking forward to buying wonderful businesses again when hopefully their stocks go on sale in the stock market. And then Buffett shared a bunch of fun facts that surprise even seasoned investors sometimes, such as how Berkshire is often perceived to be a strange collection of financial assets, when in fact Berkshire owns and operates more US-based infrastructure than any other American corporation, and they carry $158 billion of infrastructure assets on their balance sheet. So even though that wasn't their goal to have that much infrastructure that they own and operate, it's become a fact. And Buffett is very proud of that. And he said that Berkshire will always be building. And then what was about to sound like a boring fact of how in 2021 Berkshire paid $3.3 billion to the US Treasury actually ended up being an interesting story of the origins of when two New England textile companies, Berkshire and Hathaway separately, came together in 1955, and for almost a decade shareholders reaped disaster as the New England textile industry was on a death march, as Buffett put it. So all of that changed in 1965 when Buffett took over and then redeployed the available cash and also reinvested the earnings into good businesses and then grew Berkshire into the mammoth that it is today. And he said that back in the day, when in the 1950s and 60s before Buffett took over, Berkshire was only paying about $100 a day in taxes to the US Treasury, and now Berkshire pays $9 million a day in taxes. So I think that's pretty impressive how Berkshire kind of made what a sort of boring tax story would have been into something really fascinating about the power of how much Buffett was able to grow Berkshire Hathaway into a wide variety of businesses, as well as take advantage of the power of compounding. And then Buffett said that Berkshire's prosperity was mightily fostered because they operated in America, and had it not been for their American home, Berkshire wouldn't be what it is today. So when you see the American flag, say thanks, said Buffett. And then also he emphasized how Berkshire is the world leader in insurance float, the money and premiums that we pay as part of our car and house insurance that doesn't belong to Berkshire, but they're able to invest it. And so with that, Berkshire has $147 billion of insurance float that they can invest with. And he said that they had a modest gain over 55 years, as well as how, to his surprise, they had $9 billion of float last year, so that was a lot. And he said that all this float has cost them next to nothing. So they were able to use all this kind of free borrowed money to grow Berkshire Hathaway in an incredible way. And he said that Berkshire is constructed like no other insurer, and that they're able to invest for the long term, and that's able to stay their priority even long after Charlie and Buffett are gone. And he also said that when he hired Ajit Jain in 1986, he didn't have any experience, and to this date, he's proven to be the perfect choice in continuing to run Berkshire's insurance businesses. So overall, it's amazing how much insurance was able to propel Berkshire into the powerhouse that it is today, and it's a very important area to keep learning and studying in. And then Buffett discussed the four giants that make up the majority of Berkshire Hathaway's intrinsic value, and they include number one, their insurance businesses, number two, their Apple stake, number three, Burlington Northern Santa Fe Railroad, and number four, Berkshire Hathaway Energy. And he already discussed at length the importance and value of the massive float that Berkshire can leverage and invest, as well as how he said that insurance will never be obsolete, as they'll generally be able to increase sales volumes through both economic growth as well as inflationary times. And he said that integrity and capital will forever be important, and he said that it would be pretty hard to replicate Berkshire's operation in this regard. And with their runner-up giant stake in Apple, Buffett said that Berkshire's ownership stake increased from 5.39% to 5.55%. And even though he said that sounds like small potatoes, it's actually a huge amount, as Apple doing repurchases helped to increase Berkshire's ownership stake, and Berkshire didn't have to invest more dollars in Apple to get to that point of accretion. And also he said that Apple paid them $785 million in dividends. So overall, Buffett had praise for Apple's CEO Tim Cook in managing and running Apple to generate a huge amount of earnings. And then with the third giant in the BNSF Railroad, he said that it had record earnings of $6 billion. And he said that it's the old-fashioned earnings that they prefer and favor. And it is the earnings after interest, taxes, depreciation, and amortization. And he warned about the deceptive adjusted earnings that a lot of other companies like to use. And he said in a less polite way that bull markets breed bloviated bull. And I had to look up bloviated, which means to talk in an inflated or empty way. So he had a big warning there about more and more companies doing this kind of thing and emphasizing maybe EBITDA instead of after all of those things. And he also talked about the fourth giant in Berkshire Hathaway Energy that also had record earnings of $4 billion. And he said that you can read Greg Abel's report and it will have none of the greenwashing stories, and that BHE will continue to make climate conscious moves that it has been doing since 2007. And he believes that more opportunities lie ahead for them to continue being a world leader in solar and wind and other forms of energy. And then Buffett discussed the companies that they don't control but have large equity investments in, which include their top 15 that he shared a table of, and that has 11 American companies, 1 Chinese company, and 3 Japanese companies. And he also added that a lot of the selections in this table were from 2 of Berkshire's longtime investment managers, Todd and Ted Weschler. And he said that a lot of their total authority of what they manage of $34 billion worth of equity holdings is not even represented in that table. But they also manage, in addition to the equities that Berkshire holds, also a lot of the pension plans of Berkshire-owned businesses. So he added a lot of credit to these managers. And I also suspect that some of the newest investments in Berkshire Hathaway in Formula One, as well as New Holdings and Activision Blizzard, may have been the ideas of Todd and Ted. And then in a section he called U.S. Treasury bills, which I would have preferred he called a boatload of cash section. He said that Berkshire's balance sheet has $144 billion of cash and cash equivalents, and of this, $120 billion are in short-term U.S. Treasury bills. So he said that Berkshire is basically financing half of 1% of publicly held national debt, and that figure is currently $24 trillion, and that's out of a total national debt of more than $30 trillion. So basically Berkshire is financing $120 billion of U.S. national debt. And he also said that Charlie and he have pledged that Berkshire will always hold more than $30 billion in cash and equivalents, because he wants the company to be financially impregnable and to never have to depend on the kindness of strangers and also friends. And he said that he wants us to be able to sleep soundly at night, but he imagines your incredulous reaction in writing the one-liner, but $144 billion, question mark. And then he goes on to assure us that it's not some deranged expression of patriotism, that he and Charlie haven't lost their overwhelming preference for business ownership. And he also talks about how after age 11, when he made the plunge in City Services preferred stock, he's always had at least 80% of his net worth in equities. And so his favorite position is to have 100% in equities, but he concedes that right now Berkshire's 80% or so in businesses is a consequence of his failure to find entire companies or stocks that he'd like to invest in for the long term. And he said that having a cash-heavy position is never pleasant, but it's also never permanent. And he also said that there was a mildly attractive alternative in 2020 and 2021 for deploying capital that I'll explain in a moment. And then Buffett talks about the 3 ways that they can increase the value of shareholders' investment in Berkshire. And the first that's always in their mind is to be able to increase the long-term earning power of Berkshire-controlled businesses through either internal growth and or by making acquisitions. And he said that right now internal growth opportunities are better than making acquisitions. And then second would be to own non-controlling part interests in publicly traded stocks. And he said sometimes there are plenty plenty of these opportunities, but he said that today we find little that excites us. So he isn't finding a lot of stocks on sale, in other words. And he said that this is due to how long-term low interest rates have pushed the prices of everything up, whether they be stocks, apartments, farms, or oil wells. And that's something that they have to live with. And then he said the final path is to be able to do share repurchases, that when the price to value equation is right, that's the easiest way for them to increase the value of your wealth in Berkshire. And Buffett underscores that for Berkshire repurchases to make sense, it must offer appropriate value. And he said that just as they don't want to overpay for shares of other companies, they don't want to overpay when buying back Berkshire because that would be value destroying. So he said that even though their appetite remains large, it will always be price dependent. And he said that they have year to date bought back $1.2 billion worth of Berkshire shares. And I suspect that since we're already 2 months into the year, that this additional amount that they might buy back for the entirety of this 2022 year might only amount to about $7 to $8 billion, which would be only a quarter of what they did in 2021 when it was $27 billion that they bought back. And in 2020, they bought back about $24.7 billion worth. So from those points, it's a marked reduction. So I think that Buffett is gearing up for a market storm to be able to be in a position to have a lot of cash to buy back, hopefully other stocks on sale. And I say this because I think that Buffett is only expecting Berkshire to maybe grow by another 5 to 7% in its stock price. So to go from a current of around Berkshire A shares being at 480K to maybe reaching 500 to 515K per share before it's probably at intrinsic value, according to maybe what his projections might be, and just doing some proportional math with the rate of buybacks that he did in 2020 and 2021, and also judging by how much the stock price has gone up, and also by how much, if he only buys back $7 to $8 billion of shares this year, then maybe that might only boost the share price by another 5 to 7% in total. And that could be totally wrong, but it's my current estimate of where I think Buffett is going. And then that will leave him with about $106 billion left after we subtract the buybacks and also the $30 billion that they have reserved. And then they'll have about $100 to $106 billion with which to be able to buy common stocks or make other kinds of acquisitions this year, so that hopefully Buffett can boost up how much Berkshire is invested in equities all around. And then Buffett told the serendipitous story of a wonderful man and a wonderful business in Paul Andrews, who sadly passed away in 2021. And Paul Andrews was the founder and CEO of Textronics, which was later renamed to TTI. And eventually this came to have a home in Berkshire. And Buffett said that it was done in one meeting, one lunch, one deal. And he was saying that they lived happily ever after. And he also said that Paul Andrews was a class act and he was super generous to communities and helping out, and he deferred getting an increased salary. So overall, Paul Andrews was a wonderful human being. And he also said that had it not been for him, it wouldn't have led to the acquisition that Berkshire made in another Fort Worth based company called Burlington Northern Santa Fe. So all around, he has a lot of thanks for Paul Andrews. And on the penultimate subject of thanks, Buffett said that he taught his first investing class 70 years ago, and he said that teaching, like writing, has helped him to develop and clarify his thoughts. And Charlie calls this the orangutan effect, where if you can explain your most cherished ideas to an orangutan, you might leave it confused, but you'll exit thinking more clearly. And when he's taught students, he's encouraged them to seek employment in the field and with the kind of people that they would select if they had no need for money. And Buffett said that job satisfaction eluded both Charlie and him for a while as Charlie went into law and Buffett tried to sell securities. But then at Berkshire, they finally found what they love to do, and they've worked for decades with people whom they like and trust. And basically, he says that he has had the pleasure of working with all of the shareholders that are long-term minded like they are. And he says it feels good to work for you, and you have our thanks for your trust. And with that, if you enjoyed this video or learned something, please like and subscribe. And I wish you well on your journey to being the best investor you can be. Till next time.